$67. That's the new line in the sand for silver. Not a guess, not a hope, not a wild prediction. It's a mathematical floor, one that's been set by forces so powerful, so structural, that no amount of market manipulation, algorithmic trading, or central bank jawboning can break it. If you're holding silver, thinking about buying, or even just watching from the sidelines, you need to understand why $67 is not just a price. It's a turning point for the entire global financial system. Let's be clear, the days of $20, $30, or even $50 silver are over. The world has changed. The math has changed. And the people who don't see it coming are about to be left behind. If you're skeptical, good. You should be. We've all seen silver spike and crash, watched the price get hammered down by paper contracts, and heard the same old stories about suppressed markets and manipulation. But this time the numbers are different. The supply is different. The demand is different. And the consequences for missing this shift are bigger than ever. So what's really going on? Why is $67 the new unbreakable floor for silver? And what does it mean for you, your savings, and your future? Let's start with the basics. Silver isn't just a shiny metal. It's the most versatile industrial commodity on the planet. It's in your phone, your car, your solar panels, your medical devices, and the very infrastructure that powers the digital economy. Demand for silver isn't just about jewelry or coins, it's about the backbone of modern technology. And yet for decades, the price of silver has been artificially suppressed by a handful of financial institutions using complex derivatives, paper contracts, and naked short selling to keep the market under control. But here's the thing about control. It only works until it doesn't. And right now, the cracks are starting to show. Let's talk numbers. According to the latest data from the Silver Institute, global industrial demand for silver hit an all-time high last year, over 1.2 billion ounces. That's not just a record, that's a warning sign. Because at the same time, global mine production has stagnated. In fact, for the first time in decades, the world is facing a structural deficit in silver supply. We're using more silver than we're pulling out of the ground, and the gap is getting wider every year. Now, here's where the math gets interesting. The average all-in sustaining cost, AISC, for primary silver miners has surged to $24 an ounce, but that's just the average. The marginal cost, the cost to bring new supply online, especially from lower-grade deposits or new projects, has exploded. Energy prices are up. Labor costs are up. Environmental regulations are tighter. Financing is harder to get. In many regions, the true break-even cost for new silver is now north of $50 an ounce. But that's not the whole story, because most silver doesn't come from primary silver mines. It comes as a byproduct of mining for other metals, copper, lead, zinc, and those industries are facing their own crises. Copper grades are falling, zinc mines are shutting down. The byproduct silver that used to flood the market is drying up. That means the world is more dependent than ever on primary silver mines, and those mines simply can't produce at a loss forever. So what happens when the cost to produce silver is higher than the market price? Mines shut down, supply collapses, inventories get drained, and eventually the price has to rise because the alternative is no silver at all. This is the first pillar of the $67 floor, the cost of production. It's not a theory, it's not a guess. It's a hard limit set by geology, energy, and economics. If the price falls below the cost to produce, the supply disappears. And in a world where demand is rising every year, that's simply not sustainable. But there's a second, even more powerful force at work: industrial demand. Let's look at solar panels. The world is in the middle of a green energy revolution. Governments are mandating solar installations, electric vehicles, and battery storage at a scale never seen before. Every solar panel uses silver. Every EV uses silver. Every new technology that promises to save the planet is built on a foundation of silver. The International Energy Agency projects that silver demand from solar alone will triple by 2030. That's not speculation. That's based on current manufacturing plans and government mandates already in place. If those projections hold, the world will need an extra 300 million ounces of silver every year, on top of what we're already using. Where is that silver going to come from? The answer is, it isn't. Not at today's prices, not at $30, not at $50. The only way to incentivize new supply is to pay a price that makes it profitable to mine, and that price, according to every credible industry analyst, is now at least $67 an ounce. But it gets even more dramatic, because industrial users can't just wait for the dip. They need silver now. They need it for contracts, for production lines, for products that are already sold. That means they're willing to pay whatever it takes to secure supply. And when the market gets tight, they don't care about the spot price. They care about getting metal in hand. This is why we're seeing premiums on physical silver explode. It's why delivery times are stretching from days to weeks to months. It's why dealers are reporting record backlogs, and why the price you pay for a silver coin is often 20%, 30%, or even 40% above the so-called spot price. The spot price is a fiction. It's a number set by paper contracts traded in New York and London, contracts that are leveraged 100 to 1, with no intention of ever delivering real metal. The real price, the price you pay to actually get silver in your hand, is already telling a different story. And here's the contrast that matters. While Western investors are still trading paper promises, the East is buying physical metal. India, China, and other emerging markets are accumulating silver at a record pace. They're not speculating. They're not flipping contracts. They're building reserves, securing supply, and preparing for a future where silver is not just valuable, it's essential. This is the second pillar of the $67 floor, inelastic industrial demand. When factories need silver, they buy it, no matter the price. When governments mandate green energy, the demand is non-negotiable. And when supply can't keep up, the price has to rise. But there's a third force at work, and it's the one that most analysts miss: monetary demand. For centuries, silver has been money. It's been a store of value, a hedge against inflation, and a safe haven in times of crisis. And right now, the world is facing a crisis of confidence in fiat currencies. Central banks are printing trillions. Inflation is eroding savings. Geopolitical tensions are rising. And investors are looking for assets that can't be debased, devalued, or confiscated. Silver is the answer. It's portable, divisible, and universally recognized. And as more people wake up to the risks in the financial system, the demand for physical silver as a monetary asset is exploding. This is why we're seeing record sales of silver coins and bars. It's why premiums are rising, even as the spot price stagnates. It's why central banks and sovereign wealth funds are quietly accumulating silver alongside gold as a hedge against systemic risk. And here's the math that proves the $67 floor. If just 1% of global financial assets, stocks, bonds, cash, were allocated to silver, the price would have to rise above $100 an ounce to accommodate the demand. That's not a fantasy. That's simple arithmetic. The silver market is tiny compared to the oceans of capital sloshing around the world. It doesn't take much new money to move the price. Just a few $1 billion of panic buying or forced short covering can send silver vertical in a matter of days. So what does all this mean for you? It means the window to buy silver below $67 is closing fast. The forces that set this floor are not going away. If anything, they're getting stronger. Production costs are rising. Industrial demand is surging. Monetary demand is accelerating. And the supply of available silver is shrinking every day. If you're waiting for a dip, you're playing a dangerous game. The next time silver drops, it won't be because of fundamentals. It will be because of a temporary paper sell-off, a flash crash, or a desperate attempt by the powers that be to shake out weak hands. But the physical market will not care. The premiums will rise, the inventories will vanish, and the price will snap back with a vengeance. This is the new reality. $67 is not just a price. It's a floor set by math, by physics, and by the unstoppable forces of supply and demand. So, what should you do? First, understand that silver is not just a speculative play. It's a form of insurance. It's a store of value that has survived every currency collapse, every debt crisis, every empire's fall for thousands of years. When paper assets fail, when trust evaporates, when the system resets, those holding real tangible assets come out ahead. That's not theory, that's history, written in the blood and sweat of generations who lived through the cycles we're seeing repeat today. Second, don't be fooled by the spot price. The real price is what you pay to get metal in your hand. Watch the premiums, watch the delivery times, watch the inventory reports from the major exchanges. When premiums spike, when delivery times stretch, when inventories drop, those are your early warning signs that the squeeze is accelerating. Third, act before the crowd. The biggest wealth transfers in history happen when the majority is still asleep. When everyone is chasing tech stocks, crypto, or the latest meme, the smart money is quietly accumulating real assets. Don't wait for the headlines. Don't wait for the price to explode. By then, it will be too late. And finally, remember this. The $67 floor is not a ceiling. It's a launching pad. When the world wakes up to the reality of silver's scarcity, its utility, and its monetary value, the price won't just hold at 67, it will break out to levels that most people can't even imagine. This is your chance to be ahead of the curve, to see the pattern before it's obvious, to position yourself for the next phase of the cycle. The math is clear, the floor is set. The only question is, will you act before the rest of the world catches on? If you're ready to take control of your financial future, start by understanding the forces at play. Learn the history, study the numbers, and most importantly, get your hands on real physical silver while you still can. Because the $67 floor isn't just a price point. It's the dividing line between those who understand the new rules of the game and those who are about to be left behind.